A taxpayer may expect tax credits to be granted for medical aid fund beneficiaries, medical aid contributions, and medical expenses. This means that although you cannot claim medical costs and expenses as a deduction of taxable income, these medical costs may be converted to tax credits that can be used to reduce the tax you have to pay, just like your primary rebate reduces the tax you have to pay. Converting medical contributions and expenses to tax credits sounds like it could simplify things, but the actual conversion formulas can be a bit tricky. Tax credits may be granted for the number of medical aid fund beneficiaries, for allowable medical aid fund contributions, and for allowable out-of-pocket medical expenses. Tax credits for the number of beneficiaries will be awarded if medical aid fund contributions are paid by either the employer or by the taxpayer. SARS assigns income source codes to amounts such as these contribution amounts, as this provides a simple way of identifying how these different amounts are treated for tax. Being familiar with these source codes and their different tax implications will make your life a lot easier, and there are only 3 or 4 codes to do with medical contributions that you need to remember. The first 2 primary beneficiaries will be awarded a tax credit of 303 Rand each per month, and additional beneficiaries will be awarded a tax credit of 204 Rand each per month. The first 2 primary beneficiaries do not have to be you and your spouse. A single taxpayer with dependents may use one of these dependents on their medical aid, a child or a parent, as the second primary beneficiary. Just remember that you can have 2 primary beneficiaries and the second one does not have to be your spouse. Note that if the only contributions to the medical aid are paid by a pension scheme as code 4493 amounts, then these are not qualifying contributions and no tax credits will be granted for beneficiaries or for contributions. This is because these code 4493 contributions have no taxable element attached to them at all, so it stands to reason that an IRP5 reflecting a code 4493 amount cannot also show a taxable code 3810 amount. Where the only medical aid contributions are code 4493 contributions, then only out-of-pocket expenses may qualify to be converted to tax credits. Employers' contributions in respect of employees are given code 4474 and taxed in the hands of the employee of any age, including those 65 and older. The Act says that if any contributions are paid by an employer or by the taxpayer himself, then the taxpayer will be granted tax credits for beneficiaries. The Act also says that tax credits may be granted to or claimed by the person making the contributions. Contributions paid by an employer in respect of an employee are deemed to have been paid by the employee for this purpose, so the employee can claim the tax credits. You may have difficulty claiming tax credits if contributions are paid to your medical aid by a relative on your behalf. If your employer pays part or all of the total contributions to your medical aid fund, then the contributions paid by your employer are given code 4474 on your IRP5 and are fully taxable in your hands. This taxable amount is shown on the IRP5 as code 3810, and the code 3810 amount will be included in with your gross income on your IRP5 for tax. Obviously, the code 4474 amount and the taxable code 3810 amount are going to be the same. The code 4005 amount on an IRP5 is made up of 2 amounts. Code 4005 is the code 3810 amount plus any contributions paid by the employee at salary source. Note that only the employer's contributions to your medical aid fund are taxable in your hands. Your share of the contributions that you pay is not taxable. The portion of total contributions paid by the employee may not be shown on the IRP5, but the total of contributions made by both employer and employee is shown as Code 4005, and the amount qualifies to be converted to tax credits. Subtracting the Code 3810 amount from the Code 4005 amount will obviously give you the portion paid by the employee. It stands to reason that if the employer paid all of the contributions, then Code 4474, 3810 and 4005 will all reflect the same amounts. Contributions made by the taxpayer that do not appear on an IRP5 may be entered on the ITR 12 as Code 4040/4005. This, of course, includes contributions made by a taxpayer who does not have an employer. Such a self-employed or even unemployed taxpayer paying Code 4040/4005 contributions is eligible for the same tax credits for beneficiaries, qualifying contributions, and out-of-pocket expenses. Until recently, SARS used Code 4040 on the ITR 12 for contributions paid by a taxpayer and that did not appear on an IRP5, such as contributions paid by unemployed or self-employed taxpayers. SARS recently changed this 4040 code to Code 4005, which may be a bit confusing. Note that SARS's conversion formulas may allow only a certain amount of qualifying contributions and out-of-pocket expenses to be converted to tax credits. In other lectures, we will explain exactly how these conversion formulas work.